Hi there, my name is Derek Abdul, and welcome to the webinar about selling your business for maximum value. I'm pleased to be joining you today and look forward to sharing some good information and insights. Again, my name is Derek Abdul. I'm a managing partner with Benchmark International, and I oversee our California region and office and deal execution team. A little bit about me before we get into it is I'm a career corporate development M&A finance guy. I've spent my career in those areas working for big companies such as Sony, EMI, EY, and then smaller companies, small consulting firms, small investment banks, and kind of everything in between. I've been on the buy side and sell side. And what I really like to do is I like to help founders and family-owned businesses realize the value of what they built through a sale process, and that's what I do, and that's what I like to do. And so I'm here to talk to you a little bit more about that, and more specifically about in that process, how can you maximize value? What are the steps or things that information that you can take to maximize the value that you can get out of selling your business? So, how do you maximize value? Candidly, it's a bit of a paradox. It sounds simple, but it's really complex. It's preparation. And again, that sounds easy and it sounds straightforward, but there's a lot of nuance to it and a lot of things that need to be done in order to correctly prepare for a sale, and for a sale that can maximize the value. So before we even get into that, there's a couple of questions that I always like to talk about, which is why now? What do you need, and what's the process? That's what we're going to cover. So let's start with the first one: is why now? Even if you've already decided to sell your business or thinking about selling your business, you should ask yourself 5 questions, in my opinion. And the first one is why? Why are you selling? Is it for money? Is it for deleveraging of risk? Having all of your eggs in your own business in one basket? Is it that you want to go do something else? The reason doesn't matter, but asking yourself and clarifying that reason within yourself is important, so that you're comfortable going through the process, that you know your why. Number 2 is, what are you going to do afterwards? And that's really important, because it's great to envision this big windfall or the freedom or not having to pay attention to HR issues or payroll or sales or whatever. But what are you going to do after? Are you going to be bored? Do you want to get a boat and go sail off into the sunset? Or are you going to be longing to get back into the business and wish you hadn't sold? So understanding your why and then understanding what your plan is afterwards, I think, is very important. The next 2 questions are very important and are very different. Number 1 is your business ready to sell? And number 2, are you ready to sell? And so that has to do with the preparation. So we're really going to focus today on, is your business ready to sell? But we're also going to touch on, are you ready to sell? Because they're both intertwined and both are very important. So you have to be ready for the process in order to sell the business, from a business standpoint, from a personal standpoint. And then the 5th question is who's going to help you? And when I say help you, I mean both personally, friends, family, people that you can rely on. And then professionally, what kind of advisors are you going to have that are going to help you in this process? So let's go back to the first question of in the process of what do you need? What do you need in order to prepare for the sale of a business in order to maximize value? Well, it comes down to 3 areas, and it covers 3 areas. There's a financial aspect, there's an operational aspect, and then there's the emotional aspect. And so we're going to go through all of those 3 right now. And starting with the financial, it's kind of what you'd expect, maybe a little bit more detailed, but it's your summary financials. So and that's a broad definition, but what I mean by that is this: is your reporting, your financial reporting, up to date? Is it organized? Do you have an income statement? Do you have a balance sheet? You may or may not have a cash flow statement. That's okay. Do you have your tax returns? And do you have all that information for the last several years? And is it organized, or is it scattered all over? Or is it in an organizational structure where there's different LLCs or different companies? And so you have to combine all those. So having those organized and available is important. And not only on the last kind of 3 to 5 years on an annual basis, but what do you have available on a monthly basis? And the reason that monthlies are important is as you go through a year, i.e. right now we're in the middle of a year in July, those become more important because, hey, having the 2023 numbers is great for last year, but how are you doing this year? And say, how are you doing, this quarter? How are you doing this month? How are you tracking over the last 12 months, the TTM, which you'll hear, the trailing 12 months. And so having those monthly available is important because also then what about the seasonality of your business? Is there a big uptick or downturn at the end of a quarter or during a specific time of year? So that's why those monthlies are important. So having those annual reports from an internal standpoint, having your tax returns, having the monthlies. Now, if you have a CPA, if you have audited financials, great. I will say that most businesses in this environment, in terms of smaller businesses, don't often have audited financials. Buyers understand that, investors understand that, and so that's not crucial. If you have a CPA or if you have audited financials, fantastic. And make sure they help you compile and get all that information organized. But if you don't, that's totally fine as well. The other thing beyond those summary level financial statements is what kind of information do you have about your business? So do you track sales by customer? Do you track sales by your product and service line? Do you track sales by product and service line and customer? What about your costs? What about your cost of goods sold? What about your operating expenses? What are your key drivers? So what are your key drivers on that top and bottom line, on that level below kind of revenue? What's the next level and what's the next level below that? And what I like to say is if you can have the reporting and the information layer at a time, that really helps potential buyers and investors evaluate your business during the different phases. They will get to the detailed levels, but kind of one step at a time really goes a long way in terms of making the process run smoother as we'll talk down the road. So that's one aspect of having that information organized goes a long way towards contributing towards what we will call confirmatory due diligence, which we'll get into later today. But having that information organized and readily available is crucial. The next piece is operationally. And what do I mean by operationally? Is your business, what will you need operationally? What you need is a couple of things. First is the documentation. And when I say documentation, I'm talking about your manuals. Do you have an HR manual? Do you have an employee handbook? Do you have a standard operating procedure guideline or guidebooks? What kind of information about your operations, about your business, do you have documented? And that also goes for all the legal information and workers' comp and all of those kind of things. Is pulling all that information together is necessary, as well as kind of the company's information in terms of the organization when you formed the company and you founded the company. All of those kind of legal, compliance, operational documents are important and will be necessary down the road, and a lot of it at the beginning of the process as well. The other aspect is what I like to call your operational roadmap or your initiatives. So, and by this I mean things that you've planned to put into place from an operations standpoint. You've certainly grown your business over the years by doing different things or different sales efforts or marketing efforts or new products or new services or new markets, all of those things. And you've done those. And now do you have plans, or are you talking about doing other things? And have you not done them? The reason I'm talking about this is if there's a roadmap or a history of you having a plan, implementing that plan, and being successful at that plan, that's fantastic. And you need to continue to do that. If it's been, we're going to do this or we're planning on doing this, and you've never done it, or you for some reason are not doing it now, it's important to do as much of that as you can. And I'm not talking about sacrificing your future. What I'm talking about is implementing the things that you feel are right for your business. And the reason I'm saying that is when you get to the process and you start talking about growth opportunities, which is what we're also going to talk about, those growth opportunities are a lot more believable as attainable if you've actually done similar things in the past. So if you've had a roadmap of either technical development or launching new products, services, geographies, or those things, and you've implemented and executed on that, then having additional growth opportunities that you say the company can take to the next level, is that those past accomplishments are really going to add credibility to your future, which is also going to hopefully enhance your value. So that's what I mean by that. And then the last aspect from an operational standpoint is an employee standpoint, and is an employee readiness. And what I mean by that is this, is not so much talking to your employees about that, which I would not do at this stage, but is, have you identified, you know who your key employees are. And I'm not just talking about a management level. I'm talking about throughout your organization. Are they happy? How's your culture? How's your morale? Are there things that you haven't done that you should be doing? Are there more things that you want to do for your team? Basically, keeping your team and your employees doing their jobs as best they can and as being content and happy as they can be is important, because there will be a lot of uncertainty during the process, and that makes people nervous. So having them happy and content and trust you to do what you say you're going to do goes a long way. The other aspect goes to the management team, and this is where I'm talking about you as the business owner. Do you have a team in place? Can somebody run the business? Is somebody running the business, or is it all you? It's okay either way, but if it is all you, or or you and another owner or whatever, then what happens if you're not there? And what happens if you want to go do something else in 6 months after the sale? How is that buyer going to run and operate the business? So having that succession plan implemented or in place is key. It's kind of like the hit by a bus scenario is what happens. So you have you get hit by a bus tomorrow, you have your finances in order so you can track and you can demonstrate, and you're tracking how you're performing on the company. You have all your operational manuals and your standard operating procedures and things of that nature, and you have your management team in place and your key employees are happy and satisfied. That's the goal. That's the goal. And that's what every successful business owner should strive for, is to be able to create an organization where you can step away. That shows the mark of a great organization. So don't expect you to be there. Don't expect you to be close to being there. But having thought about those things and having made progress towards those things is very important as you get ready to embark on a sale procedure of your business. So that's the financial, that's the operational aspects. The next is the emotional. This might seem like, no, fine, I'm ready. I already answered the 5 questions. I know I want to sell. But I would ask you to reconsider it again, because if you have to put together a lot of this information and gather your financials and gather all your legal, compliance, and operational and manuals and all that, make sure you have everything together, takes a toll. I mean, it's not running your business, it's doing other things. And so, that in and of itself will show you, if you're frustrated with that, it's going to be even more frustrating as you go forward. So making sure that you're emotionally ready on that front is key. The other thing is that you've got to prepare yourself for the process and the sale process. It will be challenging. It will be tiring. It will be frustrating. And so again, going back to what I said before, is having those personal, family, friends, confidants, those relationships and people that you can talk to about it, as well as your professional team is really important, because it is going to be a roller coaster, candidly. Every deal, every situation is. Some are smoother than others, but there's always ups and downs. And so you need to prepare yourself for that. So those are the real aspects of preparing your business for sale, and getting it ready for sale. Those are the 3 kind of pillars. If you have those things in order, then you're in a very good position. And candidly, you're in a position that's better than most other companies. So that's the preparation side. Now, before we go on to kind of the process side, there's one aspect that I do want to cover that's a bit, you'll hear conflicting advice, and that has to do with evaluation. So let's say you have all your financials together, you have your operations, your operational information together, you emotionally you're prepared, and you are a seller, you're ready to go. The question is do you get evaluation? Some firms, some people will say, absolutely, you need to get evaluation. How else will you know what to go out there with? How else will you know what you're worth? Others, including myself, will say it's fine if you want to, but you don't necessarily need to, because here's the reality of the situation. The market determines your value. That's the reality of the situation. You can have a value of $50 million, but if the market says you're worth 40, you're worth 40. If the market says you're worth 60, hey, you're worth 60, even though you may have thought you were only worth 50. That's the reality. So what the market is going to say you're worth is what you're worth, because that's what you're worth to them. What you're worth to yourself, what you feel like it's worth, unfortunately, isn't always that relevant to buyers. They're going to look at it from their perspective. And the other thing is that it's great to have that number on a piece of paper, but again, that doesn't matter with buyer A versus buyer B. And different buyers have different perspectives at different times. And so, having that value, you can get it done, but again, the market's going to determine that value. The other thing to remember too, that doesn't mean you can't have a number in your mind or a minimum that you need to get. I'm not saying that at all. You absolutely should have that, and there's nothing wrong with that. But that doesn't mean you're going to get it. Also, that doesn't mean that's all you're going to get, because a lot of cases, you'll get more. The other thing I do want to tell you about valuation, whether you have a valuation done on your firm or the market as you go to sale tells you, as hard as it is to accept sometimes, that's not a value it's not a personal value. It's not a value on, that's my life's work and that's all that they're valuing this. Unfortunately, it's a business, and they're looking at it as this is the value of this business, and not the blood, sweat, tears, and heaven knows what you've been through in order to get your business where it is. That's just how they're looking at it. And so I've worked with a lot of sellers who are elated with one offer and then deflated with another, because again, it goes back to the valuation from one company's viewpoint, and where they are and what they're willing to pay can be very different from another company's at the exact same time for the exact same target company. So now that we've covered that, so we've covered those aspects. So let's talk a little bit about the process. And the reason I want to go through this is because, again, it goes to the preparation. So you can prepare your company for sale. You've prepared yourself for sale. You've prepared your company for sale. We've talked about the valuation. And now, why is understanding the process important? The process is important is this, because again, there's going to be challenges throughout the process. And so if you understand what's going on, you'll understand when to be concerned or when to understand that that's just part of the process. Like I said, there's going to be bumps and stops and starts and things of that nature. That's just the nature of a deal process. So understanding how the process typically works should give you some additional comfort to candidly not blow up the deal yourself, not get so frustrated or just being like, I don't want to do this any longer because I don't understand what's going on and this seems out of the ordinary. Understanding the process will help you navigate through it. So there's 5 phases from a, again, typical deal execution standpoint. There's the deal prep. There is the marketing aspect. There's kind of what I would say deal negotiations, the IOI, LOI negotiations. There's the due diligence, and then there's the closing. There's obviously a ton of things that go on at each step, and I'll just cover some of the basics within each of those. So on the deal prep, it goes to, again, taking all that information that you gathered from a financial standpoint and from an operational standpoint, but crafting a story. And so oftentimes you'll use a professional advisor that will help you with this, a professional expert, and they will help you craft the story about the company. What's the history? What's the ownership? Where did it come from? How did they build what they built? What are the products? What are the services? How do they sell what they sell? Who do they get it from? Who do they sell it to? All of that aspects. Basically a document that describes or a compilation of information that describes the business, where it's come from, and its financial performance. And then the other aspect is the growth prospects, which we talked about earlier, saying what are the prospects for the future for the company? Where could it go? Now, one of the things that I always like to say in this aspect when I'm talking to business owners is it's not where you would take the company. It's where anybody can take the company. And there's a distinction. And the reason I bring that up is because where you may have chosen to take the company and where you would potentially take it in the future may be different than what somebody else could do. And something that you've explored and either decided against or didn't want to do or didn't have the capital for, maybe exactly what somebody else has expertise and wants to take it in that direction. So when looking at growth opportunities, it's about what could this company do, not what I would do with this company or what we would do with this company. And that's important because it kind of feeds buyers ideas of, hey, there's a lot of potential. I could take this thing a bunch of different ways. What works for me versus, no, we've tried that. That doesn't work. It didn't work for you, or you didn't want to do it. It may work for somebody else. So that's the information that's gathered in that deal prep phase. And all of that information is kind of leads into that next phase, which is the marketing phase. So how do you take that information and how is it marketed out there? And it's primarily marketed in phases, in two steps. First is what's called a teaser. And the teaser is a blind item, basically a 1-page, 2-page kind of description that says, hey, you're a manufacturer of widgets in the Western US, and this is your top line and bottom line revenue, and you sell widgets that help automobile manufacturers make better tires. I don't know, something like that. They don't know who you are, but they know your industry, and they know just kind of enough, a kernel about your business. So somebody says, I'm interested. And then what happens is you as the seller would say, hey, that company sounds interesting. Yeah, I'm okay. They're not a major competitor or not somebody that I don't want to see my information. Let's release the marketing materials to them. And so those marketing materials are typically in what old school was called a book or a CIM, a confidential information memorandum. And that is, again, that story, financial, operational history of your business. And that is the detail of your business. And that goes out to those potential buyers. And they look at the company and say, okay, this seems really interested. I want to take it to the next level. And that next level can be some discussions with you as the seller. It often is, or it can go straight to kind of the negotiation phase where they can say, okay, based on this information, this is what I'm thinking in terms of some sort of a deal. That can be a multiple. That can be a value range. It's usually not a pinpoint, I'm going to pay $15 million for this company. It's, I'll probably pay, 6 to 8 times their trailing 12 months EBITDA, earnings before interest, taxes, depreciation, and amortization, which is often used for a lot of businesses. So that's what that marketing material is used for. Again, the teaser is used to get people interested in the business. And the confidential information memorandum is to get people to want to make an offer on your business. Once you have an offer on your business, it's going to usually come in one of two forms. It's going to come in an IOI/LOI, an indication of interest or a letter of intent. Sometimes they're used interchangeably. I will say that a letter of intent is usually a more formal document. Both are non-binding legal documents, but a letter of intent usually has more information about it. That's subject that we can cover at a different time in a different session. But in short, an LOI or an IOI, an LOI, or you may hear it called a term sheet, will outline what's the deal type. Is it a stock or is it an asset deal? What's the price? What's the structure? How much is cash at close? Is there an earnout? Is there deferred payment? Is there a seller? No, all of those kind of things. Who's gonna, how are you gonna finance it? What's the plan for management after the deal? And then how long is the exclusivity period? Most will ask for an exclusivity where you can't talk to anybody else, because this is when time, effort, energy, and money starts to get spent on deals. So that would outline kind of those key items. And what happens then is, if you're in agreement and you like that buyer, and you would sign with one buyer, and then you would go into an exclusivity period, and that's where you enter the due diligence phase. And that due diligence phase is going to be at least 90 days. It can be shorter. It is often not. It can be longer. It tends to slide a little bit, but 90 days is a good barometer. If somebody wants much longer than that, you need to really take a hard look at that, because they shouldn't, especially given all the deal prep that you did on the front end, with your financial and operational and emotional deal prep, because you have all the information needed. And this is where, if you remember when I was talking about that, of helping in the due diligence, this is where hopefully at this phase, because of all your work on the deal preparation, is you're entering into more of a confirmatory due diligence rather than an exploratory or discovery due diligence. That being said, that means, that the buyer is really just confirming what they saw all along versus I got to dig into this issue and really understand it because you didn't have the information I needed. So that's what I mean. And so having all of that information that we talked about available and transparent through the whole process when you get to the due diligence will help it run smoother, faster, and without incident. And there's a lot of due diligence that has to go on. It's going to be obviously financial, legal, information technology. There may be environmental, HR, operations, all of those kind of things. So it's comprehensive. And this is when a term called deal fatigue usually sets in. This is basically sellers get frustrated with the process. I've answered that question 4 times in 4 different ways, and they keep asking it. That's typically just how it happens. Now, people that you have helping you, the professionals that you have helping you will try to mitigate those questions. You will try to mitigate them being organized and having that information and just being able to point somebody to that information rather than having to re-pull it. But there is a lot of information that just gets requested and then requested again. It's part of the process, and I have not found a way to circumvent it. A lawyer wants to ask their questions and get their answers, even if the person doing the other due diligence covered that area. So that's just how it is. But you try to make it as confirmatory as possible. During that process, you're kind of getting ready for the closing process, and what's involved in the closing or getting to the closing is obviously the documentation, all the legal documentation, the ancillary documentation, the approvals needed, the leases, transfers, all of those things that need to happen in order to get the deal closed. The funding, the funds flow. There's a whole host of things that need to go. There's a big closing checklist that most attorneys will have to run through to make sure everything is done as you get ready to close. And then you close the deal and you've gotten maximum value, hopefully. But yeah, that's the process. And so those are the 5 phases of the process. And again, if you've kind of heard me talk about it, it all goes back to that preparation and making the process go smoother. And the process goes smoother, obviously, from your financial preparation and from your operational preparation. But it goes smoother on you personally from your emotional preparation and understanding what's going to happen, what typically happens, and then having the right people around you, personally and professionally. That's really, in a nutshell, kind of how you maximize value. You get prepared on the front end, as we talked about. You understand the process, and you just navigate and work your way through it. Again, I don't mean this flippantly. It's as simple as that. But again, it goes back to the paradox that I said at the beginning. It's simple yet very, very complex. And there's a lot of things that you can do that we've talked about that will help you position your company to maximize the value. Position your company in order to show the market that this is why you should pay the maximum you can pay for this company. So that's really the keys. Obviously, there's much more I could talk about with that, but that's a broad strokes overview. It should hopefully have given you a little bit of insight on the things that you can do in terms of staying organized, getting your organization ready, both operationally and financially, making sure your people are satisfied, making sure your succession plan is in place, basically having all your ducks in a row in order to present a solid, strong organizational picture of not only where your company has been, where anybody can take it, and that's why somebody should pay the maximum value for your company. So that's what I have for today, and I hope you enjoyed it. Again, it's been my pleasure talking to you about this. I love talking about this stuff, and I can't wait till the next time to do it again. Hope you got something out of it. Thanks again for joining, and have a great rest of your day.